Two clocks run on this tape, Warband, and this morning they tell different times. This is Wednesday, July 8th, 2026. One clock is the Federal Reserve, hands raised, posturing hawkish. The other is the data underneath, quietly disinflating. The whole trade today lives in the gap between them. Start with the anchor. As of 8 o'clock Eastern, Bitcoin trades at 62,100, off its overnight high, having given back part of the pop it caught yesterday when the June jobs report missed badly, 57,000 new jobs against a call for 115. Still a coin trading near half its 2025 record high of 126,000. And overnight, the engine passed judgment on the whole complex at once. At 8 o'clock last night, the InvestAnswers Decision Support System cut Ethereum and Solana to optimize trend bearish. 1 minute later, MicroStrategy, the coin's great equity mirror, and the chipmaker Advanced Micro Devices went red beside them. And at the stroke of midnight, the anchor itself, Bitcoin, cut to bearish. Mark that as the second cut this week, not a repeat of the first. The engine marked the coin down before dawn Tuesday. Yesterday's jobs miss pop clawed it back to trend bullish by afternoon. Overnight, it was cut again. Not a drift, a whipsaw, the model flipping twice inside 2 days. When correlated names fire the same signal in the same window, that is not noise. That is a regime statement. Solana wears it worst, down nearly 5% to $77. The sprinter handed back first. But hold both edges, because the same coin the trend model just cut, the valuation model calls cheap. InvestAnswers flagged this week that Bitcoin's power law quantile has fallen to 6.2%, a reading seen only at the 2015, 2020, and 2023 cycle bottoms, with more than half the supply now underwater. Trend says caution. Valuation says reloading zone. A strong hand holds both truths without flinching. The regime map underneath has not moved. Hard assets on the advance, gold at the front of the column, the broad market green beside it, while the Nasdaq complex, long bonds, and now Bitcoin sit red, and yields are climbing into a Fed that meets the tape at 2 o'clock this afternoon. Tesla, for its part, round-tripped the week, 419 Monday, back to 403 by last night's close, coiled into its July 22nd earnings. Now the gap itself, because it is the most important thing on the board today. At 2 o'clock this afternoon, the Federal Reserve releases the minutes of its June meeting, the first set under its new chair, Kevin Warsh, and that meeting ran harder than anyone expected. 9 of 19 officials now pencil in at least one more rate hike this year, a quarter turn tighter, when not a single one of them wanted a hike back in March. The median inflation projection jumped to 3.6%, and Warsh became the first chair in memory to withhold his own rate dot. So this afternoon's text is the only window we get into how the new man thinks about September. Yields have front-run it. The 10-year at a 2-week high near 4.5%, the 30-year back above 5. That is one clock. Here is the other. The Cleveland Fed's real-time inflation nowcast is running negative, month over month, for both June and July. The committee postures hawkish, while its own live data is cooling. That gap is the entire trade. Jordi Visser put it plainly this week. As the hawkish positioning unwinds against softening data, it is fuel for gold, silver, and Bitcoin. And he notes gold and Bitcoin now move in near lockstep, a 60-day correlation of 0.92. Two assets, one macro bet, the unprintable hedge against a committee that cannot decide whether it is fighting inflation or a slowdown. I give you the other edge because that is the oath. The disinflation is mostly energy. Core prices are still sticky, near 3.5%, and wages with them. The resolver is the July 14th inflation print. And near term, those climbing yields are the headwind that just faded the coin, and had the engine cut the whole complex red overnight. But step back and see the shape. When the soft money committee tightens the screws while its own data disagrees, the real question is not the next quarter point. It is what unprintable scarcity is worth. Gold and Bitcoin are answering with one voice. The merchants debase. The warriors stack. Now to the abundance side of the book, where the king just hit a wall made of physics. On Monday, the research firm SemiAnalysis reported that NVIDIA's next flagship system, a 144-chip rack built around a 78-layer circuit board, one of the most complex ever made for a commercial machine, has slipped more than a year, out to 2028, on manufacturing trouble with that very board. The fallback plan was scrapped. Supplier stocks sold off. NVIDIA disputed it within a day, insisting its roadmap is intact, without saying which roadmap. Take the direction, not the exact date, and hear what it says. This Warband has heard for weeks that the artificial intelligence build is repricing its pace, not its size. Here is that thesis in silicon. Not an analyst's opinion this time, but a board too complex to yield. Even the abundance king runs into physics, and the market is already moving on it. This morning, Goldman used the roughly 15% pullback from NVIDIA's May high, the stock near 197, to call it compelling at 22 times forward earnings against a 5-year average near 72. Here is the second-order read. The bottleneck was never demand for intelligence, it is the physical capacity to build the machines that make it. The compute keeps getting cheaper. The scarce, uncopyable things, fabrication capacity, megawatts, a coin with a fixed cap, keep getting dearer. That is the whole trade, written in a circuit board. One more front, and it is the one the crowd is miscounting. Everyone tallies robotaxi cities. Miami came online the 3rd of July, the first market outside Texas and California, and the map keeps lighting up state by state. But the moat was never the cities. It is the fleet. And here I owe you a word on sourcing, because it matters. Unconfirmed community reports this week. Not Tesla, not Reuters or Bloomberg, just trackers. Claim the company has begun pushing a distilled version of its newest self-driving stack down onto older hardware. Treat that as rumor until a filing or a wire confirms it. This Warband has been burned reading too much into a tracker before, but the durable point needs no rumor to stand. Tesla has millions of cars already on the road, already gathering real-world miles no rival can replicate. That installed base is the flywheel. More cars, more miles, a sharper model, pushed back out to all of them at a marginal cost near zero. That is what the delivery counters keep missing, and it is the hinge arc hangs almost the whole Tesla story on. Its 2029 model still centers near $2,600 a share, and the distance between a bull case well above that and a bear case worth only a few hundred turns on one variable alone, whether the fleet learns to drive itself. You can copy a model in a weekend. You cannot copy millions of cars with eyes already on the road. The intelligence riding on top is abundant. The fleet beneath it is scarce. And close the loop on yesterday's question, because I promised you the tell. We asked whether the rocket would hold its bid once the Nasdaq 100 finished gorging on it. It held. SpaceX steadied between $156 and $162 as index inclusion went live yesterday. JP Morgan pegging the forced passive bid near $4.33 billion. A clean recovery of the 7.8% flush it took on the first. An entire index swallowed a slug of it, and the price barely flinched. That is what real scarcity looks like when it meets forced demand. So carry this into the session, Warband. 2 clocks, 1 gap. The committee speaks at 2. But the tell is never the headline. It is whether the scarce things hold their bid once the posturing clears, whether the coin earns back the green the engine took overnight, and whether next week's inflation print sides with the data or the dots. Do not trade the Fed's posture, trade the proof. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Let the committee watch its clocks. The hard things keep their own time. Skål!